The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. Thursday morning. We got 24 minutes to go until the start of trading, and March markets catching a little bit of a bid over about the last 3.5 hours, accelerating. We're now above where we were in the close of yesterday. Things were looking a little dicey at about 5:30 in the morning. We'll start things off with the S&Ps. S&P's up 5 points right now, trading at 41.17. Overnight, we close at about 41.10. We tick across at that level until about 3:30 in the morning, at which point you have the S&Ps trade over the course of about 2 hours from 41.10 down to 4,085. And since then, it's been a one-way rocket ship. These are 15-minute bars, folks, and we only got one red bar, and it's barely a red bar since 5:45 a.m. this morning. We're coming in at almost 9:15 a.m. this morning, folks, and every single bar, we're going higher. We're going higher. We're at 41.17 right now, and the S&P's up 5 points. NASDAQ 100, pretty much a similar story. We tick around right near the close of yesterday's action, trade lower till about 5:30. The market takes off topside. We're now about 125 points above where you were just at 5:30 a.m. NASDAQ 100 up about 0.4%. Dow, only major index still in the red right now. You get the Dow down 3 points at 33,828, and you get the Russell up by 2 points at 2194. Commodities, currencies, whatever you want to call Bitcoin these days, the description could change any minute, folks, in terms of not sure you call it a currency anymore, because I don't know of a respectable currency, at least, that loses this type of value in this short period of time. Bitcoin, that's pretty parabolic, folks. Parabolic, I'll say. You go from January 28th, from 30,000 up to 65,000, and just like that, in the span of 10 days, from May 10th, you had a price there of 59,900 on my chart. You dipped down to actually a handle yesterday of 30,205 on the futures. We're currently trading 41,931. Man, if you bought at the low there of about 30,000, and you can't share right? That's a hypothetical, folks. But geez, you're talking about a 40% run Bitcoin now has from the lows that correlated right when I was on the air early yesterday. As I mentioned it, wheels were falling off, 42,000. One thing to keep in mind, folks, we're not going to spend the whole program on cryptos, but we've all become a little bit numb to the type of devastation that can take effect on some of these financial instruments because we trade in an environment that's regulated to prevent these types of collapses in the equities that people have, just the equity that people have, the pure value that people have, that it can't cascade from you have a position in one day to hysteria takes over like it did yesterday, all right? But it might take over again today, folks. It could take over at any moment, especially if Elon has a tweet to share, and I'm being real there. There's no trading curbs. There's nothing like that. Bitcoin could theoretically go from $60,000 to $2,000 in the span of a day. Who knows, right? Don't think that's going to happen, but it's something we've never seen before. And you start seeing the carnage that we saw yesterday. That's a potential, folks, to keep in mind as that thing ticks across. So Bitcoin, though, catching a bid, no doubt about it. We're up at 41,900. We're going to be talking a little bit of Elon. He's out there pumping Dogecoin again. Crude down 49 cents. Crude with some volatility over there. Crude's trading 62.87. Gold contract down $10 at 18.70, and silver down about 19 cents right now as well. Notes and bonds, a little bit higher price. We're talking about a yield right now of 1.66%. That's what you're looking at, 1.66% on the 10-year. Okay, let's jump over to that jobs number to start things off. So jobless claims dropped more than expected, slightly more. I mean, we're talking about 6,000 to 8,000 jobs, folks. That's an irrelevant decimal point in the span of being almost 10 million jobs under the employment levels that we were at coming into COVID, and you're dealing with 6,000 jobs on an initial claim. But nonetheless, it's a beat in the right way, as in less jobs than the market was looking for claimed for jobless benefits. The total represented a decline. Previous week, you're talking about 478. Continuing claims, though, rising by 111,000, though that number runs a week behind, okay? So continuing claims a week delayed versus the initial jobless claims data, where that is for the week ended May 15th, I believe. There you look at it on the chart. It's a declining number, folks, in a big way. 444,000. You see where we were coming into COVID. Remarkable when you see the carnage that happened at the beginning. We were losing 5 to 6 million jobs. That's a week, folks. You lost 11 million. I mean, you add up the 3 or 4 weeks just as things really started, right? You have 11 million here, call it. Now that's 12 million plus 5, 17 plus 4, 21 million plus 3, you're at 24, et cetera, in the span of 4 or 5 weeks. For the same period a year ago, continuing claims were 2.3 million. There's your continuing number, not the uptick you wanted to see. Continuing is going to be a different deal there. And then, of course, you have the numbers of people that are on the emergency unemployment programs that differs from what they're talking about here, which continuing claims, because a lot of people will fall off unemployment rolls because they've exercised all the available unemployment available to them. They'll no longer be on a continuing claim. They may then be able to apply for emergency assistance through one of the programs that's been passed of stimulus through Congress. Let's see what they say. Still, the numbers overall help provide some optimism after April's stunning disappointment. I'd be cautious on that one, folks. Initial jobless claims is not going to get us back to business, not when we're just beating by 6,000 jobs. Still, with almost 500,000 people filing an initial unemployment claim last week, that's a tough one. You know, that should not be happening as we open back up. Those numbers should be dropping a little bit quicker, in my opinion, than they are. Here we go. So along with the continued slide in the headline number, the total of those receiving benefits, and that's the total, talking about this is with everything in terms of the employment, just shy of 16 million, and that's data through May 1st. Most of the decline came from a decrease in those getting benefits through pandemic-related emergency programs. You have states not providing those extra employment programs right now as that comes into the shape of things as well. So nonetheless, that number out at 8:30 this morning, and markets liking what it has to say as we continue to slide upward. We're at about 4120 in the S&Ps. Now look at this, folks, right? You can see on a fifth, there's a 5-minute bar. I'm going to zoom it in. Okay, Wednesday, yesterday, I was talking about it. I was saying, hey, you know, there is a daily trend line channel going on here, folks, and this S&P yesterday was bumping right up against that channel line, and we are now 60 points. We're 1.5% above that channel line. Now, folks, doesn't mean that's going to be right. I just love the clarity when you're making trades like that, right? If you're making a trade, you're looking for a bounce, and ode to our man Bud Rolfs, the channel master. He was a former host, newsletter publisher for TFNN in the years back. Many listeners familiar. He loved the channel lines. I learned them by watching him doing them so well and seeing how consistent sometimes those channel lines could be. It doesn't get more consistent than this daily, folks, on the S&P. We're only going back to October, too. This is not the full scope of the COVID run because things get a little bit different there. But ever since we got the vaccine efficacy numbers, the election got taken out of things as well, we've been trading higher in a pretty well-defined channel line. We've bumped along the bottom of that on a few occasions. We're near the bottom line just now at 41.19. Boy, we ever make another run to the top side, folks, you're talking about in the ballpark of about 42.80 maybe in the S&Ps on the upside. But just an area to keep your eye on when you get back down to this level. Always nice when you can set your stop on the other side of that and see where you're at. Breaks that channel line, you get out of that trade. Trades higher, got potentially a solid 100-plus points the upside of that channel line. Stay tuned, folks. We're coming right back. We're talking to Kevin Hanks, the TD Ameritrade Network, Fast Market. We're talking equities and options. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps up about 9 points right now. We have the NASDAQ up 61, the Dow up 28. All the markets continuing to melt upward in positive territory. Even got the Dow inching into positive after being the only major index in the negative. And that is on the heels of course, the weekly jobless claim number coming in lighter than they had been thinking. Jumping around to some of the equities with earnings this morning coming out, we had coal shares tumble despite retailers' strong sales beat and hiked outlook. We'll jump over to this real quick before we jump over to our man Kevin Hinks, and there's a little drop for you. Coal's going from about $60 to $56 this morning so far. All right, folks, let's jump over to our man Kevin Hinks. Every trading day, 11 a.m. Eastern time on the TD Ameritrade Network, streamed right here on Tiger TV. Fast Market, Kevin Hinks, Alex Coffey, and the team. We got a bunch of retail earnings going on this week. They break down hypothetical trades as well as taking a look at the market. We get some market action, of course, with the weekly jobless claims number. Kevin Hinks, good Thursday morning, man.
Good morning, Tommy O'Brien. How are you? A lot of dust settling this morning as we've now got all four of the major indices up slightly to start the day. They were all red about a half hour ago. They've all now crept into the green category here this morning, as you know, Bitcoin is now up about 6%. So being a little more, actually 7.5% now. I'm sorry, it's rallied since I just looked at it. And even though overnight it's got it had about a 7,000 point range in the overnight session. It's calm this morning. Jobless claims were a good number. Philly Fed was a pretty big miss. Now, that's just a regional data point in manufacturing around the Philly level, so not much. That's a secondary level at best. So far, so good this morning. Pretty calm markets here, Tommy.
You know, it is remarkable, Kevin. I was saying to my dad yesterday, as a trader, and I don't trade Bitcoin, folks. I don't. But, man, you got the carnage yesterday, Kevin. 30,205. We were talking about it yesterday, almost at the depths of it, man. It was about 9:15 that Eastern time that we had Bitcoin down at almost 30,000. And since then, Kevin, it's up 40%, 40%, $12,000. You can't really catch a falling knife, so not really a fair trade of somebody. Somebody was buying at 30,000. Nonetheless, interesting, man. Getting back to equity, as I said, we had some earnings out this morning. Kohl's pulling back this morning. We still got retail earnings coming up. What do you guys have to be talking about today, Kevin, with everything going on?
Yeah, three good names that we're looking at today with the earnings coming out. Applied Materials in the A block, and then Foot Locker, the gym shoe retailer. We'll see how they're adapting to, online sales from Nike and direct-to-consumer from Nike. And then we'll look at the agriculture behemoth John Deere, and we'll see how
Nice.
John Deere's doing now that the fact that farmers are flush with cash, Tommy.
Yeah, that's quite an interesting chart on John Deere, right? Talk about a run to higher prices. We had, whether it was the low of 2020, you were at about $35. You went to 108, and since then we've backed all the way down to $70. Quite a retracement for John Deere. So, Kevin, I just wanted to talk real quickly about the weekly initial jobless claims, because I do some gymnastics in my own head of saying there's still almost 500,000 people, right, on a weekly basis that are filing a new initial jobless claims number at a time when vaccines are so prevalent, right? I mean, we're basically at the point that any adult could probably get vaccinated. They might not be to the second shot plus the 14 days, et cetera, but we're almost there. And you still have 500,000 people. We missed on the jobs number last week. How do you look to that initial jobless claims number in your own head when we're still it's a good number, right? It was lower, 444,000. Market was taking 452. But that's only 6,000 jobs, Kevin. We got like millions to make up. What do you look at when you see almost 500,000 people on a weekly basis right now filing a new initial jobless claim number?
Well, first, some history, Tommy. Number one, the normal low level for this number is around 2 to 220,000. So once we get there, we're back to the normal ranges. Now, with a JOLTS number last week that hit north of 8 million jobs, I expect this number, and what you're seeing in some states are they're starting to pull back on some of the advanced unemployment benefits, and that should bring people off the sidelines and back in to the labor force. So I think we're getting into the final stages of people coming from their homes, getting back into the labor force, like leisure and hospitality, right? Restaurants, bars, hotels, things like that, all the final phases of employment. So I think, it's marching back towards those ranges of 2 to 220,000, Tommy. I think the JOLTS number is a good number, and this is a number that we'll continue to watch. It's high-frequency data. We get it every Thursday.
It is interesting, and you make a great point, man, because in my head I'm saying 500,000 people, but you're right. On a normal basis, it's at least 200 to 250,000. Now, with the job openings where they are, maybe we should at one point, and maybe you could call it transitory, that we get a little even below that 200,000 if things are really rocking and rolling, right, and everybody's getting back. But 444,000, not bad, all things considered, because we still have a little ways to go. States are kind of ripping things back open right now, some states. So hopefully, in the next month or two. But expectations are going to be pretty high, Kevin, when we come into, whether it's the May non-farm payroll number. It's amazing. It's already May 20th. We're going to be getting that number in a couple weeks. And expectations after 266,000 for the month of April, I imagine they'll be pretty lofty. But before we get there, we got some earnings to kick through, man. Well, listen, we look forward to the program as always, Kevin. We look forward to your analysis on the equities that are coming up in terms of AMAT, Foot Locker, and JD.com. I got them. No, not JD. John Deere. Excuse me.
Right.
Perfect. We'll be watching, Kevin. We appreciate the update. We look forward to the program.
Thanks, Tommy. Have a great day.
You too, man. Take care. Folks, tune in every trading day. The way they walk you through hypothetical trades, folks, I say it every day, but if you're unfamiliar and just not confident in the options market, it is a phenomenal program that you can learn how they structure those trades, how they manage them. Are you rolling trades on a weekly basis? Trade management. They go over the whole deal. Great program. Check it out at 11 o'clock Eastern time. All right. As Kevin mentions, markets upward territory. We have all the indices in the green right now. The Dow up 20 points at 33,851. S&P's up about 8 points, checking back in on Bitcoin, and it is, as Kevin mentioned, you got to keep updating it. We're up 7% right now, and that's technically on the session, let alone the run that we've had. You're talking about almost 40% from where you were in 30,000. And folks, I do not trade Bitcoin again, and with this type of volatility, if you're trading Bitcoin, it should probably be almost all risk capital, because setting a stop in this environment is not a feasible option when sometimes you can just fall out of bed to the tune of thousands of dollars in mere minutes. But interesting area that Bitcoin bounced in, because if you were making a trade, 30,000 might have been a nice point. That's where it bounced back in January, right? You almost got halved in terms of where you were. You got more than halved, really, but you got halved completely from where you were on May 10th. You bounce at 30,000, you go below 30,000, where's the next stop? Next stop's probably right down here at 17,826. See if we back things out even further. You're talking about the real run begins in October, maybe at 10,000. Maybe we begin at that 18,000, as I mentioned, but 30,000, not a coincidence maybe that we bounce at that area that we also bounced in going back to January 22nd to about January 28th. All right, folks, stay tuned. We're going to be talking, this will be a nice segue. Where are we? Dogecoin. We'll pull up some Doge on Elon Musk's tweet as wild crypto trading continues. How much is that Doge in the window? It's just constant shade. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I got the S&Ps up by 9 points in the opening bell. NASDAQ 100 up by 58. You get the Dow up 48 and the Russell up by 3. Markets in positive territory to kick things off. Jumping back to stay with that crypto trade. So Elon, I mean, it just must be fascinating when millions of people hang on your every word. I would love to see how Elon is trading or potentially, fronting, as in, you know that Doge is going to blow up when Elon tweets. How much is that Doge in the window? And what happens, folks? There's your Doge, okay? There is 6 in the morning. Doge was at 36 cents. It's now trading at 43. That's about a 20% rise on that tweet. It is staggering the influence that Elon is having tweet by tweet. And yeah, you want to try and ride the wave? Good luck to you. You might be the one that catches this as it goes to zero, though. You have to keep it in mind. And I imagine people at the SEC are going crazy. And they should be, because it's just constant prodding, innuendos. Tesla has diamond hands. So, normally a CEO in an area like that, insinuating that he has not sold his balance of crypto. And if you don't know the verbiage, right, this is diamond hands, means strong hands, meaning you're going to hold it, meaning you're not going to sell it, right? Tesla has diamond hands, hold on for dear life. It's the whole Reddit, Wall Street Bets language, but it really doesn't mean anything. He could have strong hands until there was too much carnage, and then Tesla sells yesterday. Maybe he's saying that. Maybe it boosts the price. Not supposedly how markets are supposed to work, folks, but that's how it's going right now in the crypto sector. Just beware in a big way. All right, let's jump back to the real market news of equities. So Morgan Stanley, quite a shakeup in their leadership as the CEO looking for an eye on the successor. There were like 4 or 5 different shakeups here as you have what's going on. So the CEO, James Gorman, unveiled his biggest leadership shakeup more than a decade, positioning a small group of lieutenants, 2 in particular, as his most likely successors. Ted Pick, so he's the architect of Morgan Stanley's trading revival, and Andy Saperstein, who built the company into a wealth management powerhouse. Those are the 2 as tapped as co-presidents, given expanded roles at top Wall Street bank that's been gaining grounds on rivals. Yeah, Morgan Stanley's been a rocket ship. MS, excuse me. You go from $46 to $86. Today, you're up about 0.3% on that news. Jumping around to some of the other banks as the market's continuing to rise, folks. S&P's up 16 points right now. Goldman Sachs, basically flat at 358. This thing's almost doubled, same thing in price, from 185 to 376 recently. JP Morgan, one of the strongest ones out there, going from a price point about 95 back in early November to 160. Today, we're down about 0.1%. We made all-time highs just 2 days ago to 165 for JP Morgan. All right, let's jump around to some of the other things going on out here. Interesting article talking about Oatly. So Oatly, I think they're going public this week, next week. Going to value that company at about $10 billion. They're raising $1.4 billion. The brothers who started it making about $500 million in that quest as they go public. And interesting when you talk about, they've been in this for like 20 years. You think that this is a rage, all the rage recently. But not the case, just pretty recently ago in terms of when they started this thing. In 2001, the product been released through various partnerships. They launched Oatly. So they first were talking about in 1997, okay, that they got into this. Skeptical, of course. The company developed a small but devout following. They only had 100 employees as recently as 2015. Now, here's what's interesting, right? They have Oatly's largest shareholder, a joint venture between Belgium-based investment firm Verlinvest and China Resources. A state-owned conglomerate will control roughly 48% of the company's shares after the offering is completed. Blackstone owns about 7%. Those are some staggering numbers in terms of the ownership that those are going to have in there. But nonetheless, the founders left with about $500 million in that. And if it's going to be worth about $10 billion, maybe they got about 5% of the stock as they push it out to the public recently. And, I love almond milk myself personally, folks. Dairy, I'm not lactose intolerant, but dairy in general is just not great for you, in my opinion. Too much of it especially. Not so. I love almond milk. oat milk, a little bit more fat in it. Just getting into it, so I'm not as into it, but it's good as well. And you're seeing Americans and across the world. They're in 20 countries, I believe they talk about now Oatly as they go public, and it makes all the rage going forward. Okay, what else we got? What were we talking about? Yeah, this one's interesting. Microsoft and Apple waging a war on gadget right to repair laws. So dozens of states have raised proposals to make it easier to fix devices for consumers and schools, but tech companies have worked to quash them. Pretty interesting how it works out in terms of how you can get things fixed. Apple, of course, want to make sure that they get, the revenue of fixing anything. You bring an iPhone to the Apple store, right? You have to pay them to fix it, etc. You're going to see this play out because it seems like, and this is where, folks, as citizens, okay, you have a right to do anything you want. We can pass laws that can do anything you want. You can say, well, companies have this right. No, we have the right. The people have the right, okay? Apple sells you a phone. You should be able to take that phone. That should be your phone. You should be able to go bring it wherever you want and fix it wherever you want, okay? They shouldn't own the rights to touch that phone forever. We have the power to do those things if we want to do them. Companies like Apple don't get to control everything if we don't want them to do. 27 states considered such bills in 2021. More than half already been voted down or dismissed. According to consumer groups, the advocates of these bills, the current repair system is a major reason why we cycle through personal devices so quickly. Furthering, you have environmental impacts in here. Smartphone habits alone eats up 23.7 million tons of raw materials as they cycle through because it's too expensive to go through it and fix all these things. So what happens? They cycle us into a new phone, right? You're going to see that play out, and hopefully it does, because it makes no sense that they have a lock stop on that. And it's all about being the biggest companies in the world and having the lobbying power to spend the money to do it, because on a common sense basis, does not make sense, period, end of sentence, folks. We all know it as consumers. Yeah, so there you go. We'll leave it at that. I think I said my piece on that one. All right, what else we got going on? Let's jump to some of the stocks. Whoops, I just closed the one I was going to take a look at. Okay, well, we'll jump to some of the FANG stocks, see how they're kicking off. We got the NASDAQ 100 up 113 points. Amazon shares up about 0.4%. Amazon just been in that consolidation since back in July from about 30,000 to 3,500. We'll talk about Microsoft. Microsoft up almost 0.9%. Apple shares this morning up about 0.8%. Checking back in on Kohl's. They had earnings this morning. Kohl's down about 10.3%. Quite a divergence. We'll get into Kohl's numbers in a moment. We're going to kick it off before Kevin jumped on. Quite a divergence when you think about Kohl's down about 11%, right? Well, we had, what was it? TJ Maxx was out with their numbers. They had quite a struggle, actually. Look at that. They did. They traded from 72 down to 67. We're up about 1.5. The two giants just crushed it. Walmart crushed it in a big way, but they pulled back a bit. And we also had Target really crushing it in a big way. Look at that Target expansion. Now here, we talked about the channel line in the S&P, right? This one is even steeper. When you look at the channel line we got going on in Target, I mean, where that top line goes, that's a little bit of an art, not a science. Where are we going to pin it, okay? Where are we going to pin it to line up those four tops? But as you can see, maybe we're talking about a run that could push it to 218 if we reach the top of that trading zone in Target. Stay tuned, folks. We'll be right back in 3 minutes.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. S&P's up 17 points right now. Get the Russell actually sneaking into the red, down 10 points. Look at this Russell, putting it on a 15-minute, 5-minute even. Look at that collapse we just got in the Russell. You're talking about from 2197 to 2181 right now in the Russell, down about 0.5%. Dow giving back a few of the points it had as well. Dow's up 5 right now, clinging on to gains. And the NASDAQ, though, the flip side of that, continuing to accelerate upwards, up 1.1%, seeing a little divergence. S&P's up about 0.4%. So we talked about Kohl's. Man, Kohl's has some decent numbers to be trading down, talking about 10%. I mean, we talked about earlier in the week, what would happen if Target and Walmart didn't crush it out of the park, right? Target's positive in a decent way. Walmart had some staggering numbers. They're barely positive for the week. This is probably what happens if you don't crush it out of the park. The stocks trade you down 10% because Kohl's numbers, you're not going to believe that it's down 10% when you look at where they are. Fiscal first quarter profit and sales soared past analyst estimates. We live in quite a world, folks, in terms of the expectations for some of these stocks. Earnings, $1.05 versus 4 cents. Where are these analysts coming up with these numbers? Talk about being off the whole entire earnings season. Revenue, $3.89 billion versus 3.48. Net income climbed to $14 million or 9 cents a share from a loss of almost $500 million a year earlier. Revenue soared nearly 70%. I mean, year earlier numbers are irrelevant, folks. Company says store sales more than doubled during the quarter. Digital sales rose 14% year over year. It didn't break out same-store sales figures. That might be a little worrisome to the market. That's one red flag right there. Same-store sales are a hallmark of earnings. If they're not breaking them out, do the math. Are they good or are they bad? They're bad. No question about it. If they were good, they would break them out. They're not what they want to share, so they're not sharing them. Chief Executive Michelle Gass said momentum built throughout the quarter, especially in stores where the retailer had been investing in new private brands. So Kohl's expects full year adjusted earnings, $3.80 to $4.20, up from $2.45 to $2.95. Getting into the numbers, let's see, because part of this they were talking about is that they are below 2019 numbers, which is what I was looking at here. Here we go. So Kohl's results are not as strong when compared with those before COVID pandemic, according to Global Data Retail Managing Director Neil Saunders, noting that sales are down about 10% from 2019 levels. So that probably hurting the stock as well. You see the volatility. You got a little bit of a bounce coming into the opening bell, but it gives it all back. And putting this thing on a daily, it's been quite a run. Okay, so you've given back basically the whole run we've had since February. You really accelerated above that level on February 19th, and we've given basically all that back. We probably trade down to about $50 on Kohl's. You're looking for an entry area. I mean, that could be an area. I'd keep my stops in these because, you know, if you start faltering, there's a lot of optimism in Kohl's. When you just traded from $20 to $65, you're still trading at $54 from $20. So keep it in check. We've seen the type of volatility when these equities might get ahead of themselves on some of these moves. All right, let's take a look at some of the other stocks moving this morning. So Virgin Galactic, how about this one? Surging. Pre-market, let's see if it holds on, said the next test flight of its Spaceship Two will occur on May 22nd. They did not have a date on there, so the market liking that they're actually giving some details of progression of things. SPCE is their symbol, 14.3%. But as I just mentioned, now Kohl's is nothing like this equity, but talk about getting ahead of itself, folks, from 62 down to 15. Be careful on this equity. That's quite a gap, but be careful. You see the demise it's at. All right. Hormel, let's jump to them. Earnings of 42 cents a share, just a penny above estimates. Producers' revenue also came in above projections. They have spam. Jenny O said demand in its various channels remains elevated compared to pre-pandemic levels. That's what we like to see. Tell me what we're talking about pre-pandemic. And there you see a rise of about 6%. This thing's just been chopping around. I mean, look at this going back, right? Pretty consistent stock when you look at where we were. We're right back to prices that we were at basically on February 10th of 2020 right now at $48, up 5.8% for Hormel. BJ's out with their numbers, 72 cents a share, 15 cents above. Revenue beating estimates as well. The comp same-store sales ex-fuel fell by 5%, smaller than the 8.3% drop they're looking for, though. This is because they're probably benchmarking it against 2020 when the whole world was stocking up against grocery stores. Folks, I think I had some $400, $500, $600 grocery orders at the beginning of the pandemic. You didn't know what was going to happen. Stock up, right? I wasn't hoarding. You just didn't know how long you were going to be there. I didn't want to be taking trips to the packed grocery store, etc. Some pretty tough comps that they're dealing with, especially when you think about that. BJ's pulling back 8.9% on those numbers, though. Check that out to $44 from $49. And here you go. They also said the rest of the 2021 remains difficult to forecast. Not surprising, folks. I mean, this is what we talk about. This is why it's a great time to be a trader. It's very difficult to price in future growth because normally companies grow on a yearly basis, and you either see that they're accelerating their growth, they're decelerating that growth. You take that growth rate, you apply it to their future earnings, you get a multiple on that future earnings. The market is very unsure on a lot of equities what the next 12 to 24 months are going to look like because the last 12 to 24 months are so out of the ordinary. That's why there's so much volatility. But that's a good thing if you're a trader, folks, because the market is not able to basically price correctly some of these equities because they can't price the growth correctly, especially when you have even, CEOs, even executive boards saying we can't forecast the remaining year because it's so difficult to figure out what's going to happen. Kohl's we've pulled up. They're lower this morning. Petco's out with their numbers. Let's see how they're trading. They earned quarterly earnings of 17 cents. The market was looking for 9 cents. Revenue also beat forecast, and it's raised its full-year forecast. That should be a good thing for that stock. And no, down 5.7%. Really interesting. Wonder what they're talking about on the conference call, maybe that began at 8:30. Nonetheless, it opens, and we're down lower. You pulled this thing on a daily, and, man, that's a tough one. When you look at this thing goes public, I believe. Or maybe they changed. Not sure what that is. Maybe they did go public in January, and this morning you're down 5.6% on pretty strong numbers and a raised forecast. Something to keep your eye on there. Cisco was out with their numbers, pulling out Cisco. Cisco shares down 3.2% on their numbers. They beat by a penny a share. The revenue top forecast. However, Cisco issued weaker than expected current quarter guidance. The company said its profit margins are under pressure from supply chain challenges. All right, let's jump to L Brands. L Brands. I have some L Brands for some disclosure. Had it in there since the pre-pandemic run. Down about 1.1% on their numbers. They came in 4 cents above estimates. Quarterly profit of $1.25. Revenue slightly above consensus. Comp store sales of Victoria's Secret jumped 25%. Now, they had been the big laggard. Bath & Body Works saw a same-store sales increase of 16%. I mean, this is why when you see a company that comes out and doesn't give you same-store sales, and you have other companies that have given you same-store sales of 16%, 25%, right? Walmart and Target were through the roof. Companies not providing guidance for the full year also said it's targeting the completion of its split into two separate companies for August. Seems to be all well there. That's a strong company, but man, where you get into this equity, I don't know. Because it's just like, how do you get into this equity, folks, when you just go from a price of $13 in June to $66? If you ever want to get into it, you enter it in a very, very tiny partial position, because the pullbacks can be substantial, as we know. I mean, just for fun, because it won't be fun if you're holding these shares. A 382 of the run we've had brings you back to $50. You don't want a 25% pullback just to get to a 382 of the run it's had since last June. Stay tuned, folks. We're coming back to finish up the program.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Got a chart of Ford up here. Ford up almost 4% right now, trading at $12.59. Jumping over some Ford. How about they already got 20,000 reservations for the new electric F-150 Lightning pickup in less than 12 hours since the truck was officially unveiled to the public Wednesday night. Reservations being closely watched by the company as well as investors to gauge the interest in customers in EV pickups. Looks to be some decent interest. The market taking note. Ford CEO said the F-150 Lightning will be a test as to whether mainstream Americans truly want electric vehicles. Not sure what that means. Do I only want gas vehicles? I don't even know what that means. The world is going to electric, bro. Either way. And the market's speaking today. Of course they do, folks. It's going to happen. That's where everything is going. Ford's up 4%, $12.60 so far this morning. This market, it's not stopping, folks. One way since about 5:30 this morning. We were trading at 4,083. You're talking about 50 points. 5-0 to the upside since where we were last night. Things look like they're in great territory in terms of the S&Ps being up 0.5%, but that's coming from where we were last night. You're talking about 50 points from 4,084, putting this back on the daily to see where we're operating. I've talked about this S&P. You take a look at that trend channel line. I mean, yeah. Be careful here, folks, because we've been bouncing around against the lower boundary of this channel line. But you catch a run to the upside, and you're talking about pushing potentially 42.80 to the upper boundary line of that channel line in the S&P. Let's check out the VIX this morning. Volatility index trading at 2113, far cry from the 1538 we got about a month and a half ago. But nonetheless, pulling back. You put this on a 15 minutes, volatility getting sucked out of the market as we continue higher. VIX was at 26 yesterday. We might get a 20 handle before long in that VIX. All right, folks, stay tuned. We got a man, Basil Chapman. He's going to be coming up next with the Tiger Technicians Hour. Fast Market at 11. They'll be talking, I believe it was AMAT. What are they talking? AMAT, what do we got? JD, John Deere. They'll be talking along with one other. They'll be talking three great stocks. I'll be watching that program. I'll be watching them all. I always got TFNN on during the day, folks.